Welcome back. China is still top of mind recall simply because foreign funds are not coming to emerging markets. There seems to be a perceived slowdown. Notice the way in which the dollar index has gone all the way above 94. There is that preference for developed markets for US over EM leading to outflows. So today we are still trying to prod how serious could be the slowdown in China because of various things. You know, the crackdown on big business, on tech firms, on property firms, as well the latest power outages. Joining me now is someone who knows China really inside out, Xinxin Li, the Managing Director and Senior China Analyst at the Observatory Group. Previously, he was with the Chinese Sovereign Fund, CIC. Before that, he was a diplomat in the Chinese Foreign Service and also the investment manager at the CITIC Group. Besides, of course, he has a degree both from Harvard and from the Beijing University. So really knows China inside out. Mr. Li, thank you very much indeed for joining us.
Well, hello, Lasa. It's such a great pleasure.
Thank you. Well, the first question really is that, do you expect this various things, power outages, property, crackdown on tech, can the composite picture be a slightly serious slowdown?
I think the current situation is still quite fluid because the whole world is now focusing on this issue of Evergrande debt crisis. And we are expecting an imminent government intervention into this debt crisis. That basically means a so-called Lehman Brothers moment of the China's housing market crisis is unlikely. However, this is still a quite uncertain period for the Chinese economy, because in the past 2 decades, we have seen this housing market price always up, up, and up. We have never experienced a full cycle of Chinese housing sector. So what is laying down behind is still a very uncertain period for the Chinese economy. On top of that, we got this quite a serious shortage of power supply in China. It is related to this problem of widespread shortage of coal supply in China, because coal accounts for about 70% of China's energy consumption. And also, in the past few years, the Chinese government has been imposing the tougher regulation of energy efficiency and the carbon emission. And we know that in the coming months, the global leaders will get gathered in Glasgow, United Nations Climate Change Conference. Okay. And the whole world is now expecting that China to make an even further commitments of energy efficiency and the emission cut. Okay. So that could be another major constraint for China's the future economic growth. Okay. So now the situation is still quite complicated. Okay. I would expect a significant slowdown in the coming months.
Oh, significant slowdown, you would say. Yeah. Let me take it one by one and then ask you, when the U-turn from the slowdown may come. First, this power issue. I agree that China wants to make a big impression at the Glasgow COP meet, climate meet. But can the shutdown of factories end by October? Is it only 1 month? How long?
Well, the Chinese government is now imposing this quarter by quarter this system of the emission cut and energy efficiency review. So that basically means by the end of this month, the energy consumption situation is pretty tight. In early October, China will have this so-called Golden Week, this 1 week long national holiday. We would expect that during that period, this very tight energy supply and the demand situation will be eased somewhat. But in general, this pretty tight situation of the energy supply, especially the coal supply, we will likely sustain in the rest of this year.
Okay. No, I mean, companies in India are worried whether shipments from China for inputs, supply chain will be impacted, chips and several things that people depend on. You think production will smooth out by, say, October itself, as you say, after the October first week?
We believe that this slowdown is not over yet, because we just got the PMI number in September.
Yes.
So it seems that this slowdown is still ongoing. So we are expecting that this industrial production and then some other economic activity number to get worse before it get better.
Oh, okay. So there is still some slowdown left. What
Yes.
about the, a final question, what about the housing issue itself? You know, for the past 15 years, for many years, China has encouraged fixed asset investment. Now
Yes.
to turn the population away from investing in housing, can that mean a lot of slowdown even in 2022?
Well, housing is a very important sector of Chinese economy. According to the official data, China's real estate sector contributed about 7.3% of China's national GDP last year. And if we add construction, that share of GDP is about 14.5%. If we add downstream and upstream economic sectors, its direct and indirect contribution to the GDP growth is more than 25%. In the meantime, the banking industry has a significant exposure to the housing sector. About 29% of total outstanding loans of Chinese banking industry is in housing, is about the mortgage and the housing development loans. And also about 69% of total household assets is in housing.
Oh.
So this is really a pillar industry for Chinese economy. And we have never experienced such a stressful moment in China's housing market in the past 2 decades. So that basically means the coming 2 months for the Chinese housing market will be a very interesting time. And we should watch very closely every step of this Evergrande debt crisis and the government's policy response.
You expect government will help the domestic investors and let down the foreign investors? Is that a possibility?
Well, I think this is regarding the potential debt restructuring of the Evergrande debt. Yeah, I believe the Chinese government is still paying very high attention to this potential debt restructuring and this order of repayment. I don't believe they want to give a differential treatment between domestic investors and of offshore investors. Maybe at this moment, for Evergrande, its cash position is extremely tight. It doesn't have enough cash to pay the coupon payment of the offshore investors. But I don't believe this is the policy goal to prioritize domestic investors over offshore investors. And that's not the real case.
Fair enough. Just a final quick question then. So 2022 also can be a slowdown year?
I would expect next year the government should stimulate the economy because China will hold the next party congress of the CCP, the ruling party. So the party congress is basically a general election in China. And according to the historical experience, stimulating the economy in the election year is a general practice. Okay. We would expect in early 2022, the government will use the government spending in infrastructure and other stimulus and policy to sustain economic growth. So we are cautiously optimistic about the growth outlook next year.
All right. Mr. Li, it was a pleasure speaking with you. Thank you very much for bringing in some understanding and removing some misconceptions about how investors perceive China. Thank you very much for joining me today.
Thank you. The pleasure is mine.
Okay. Well, actually, before I wind up, the latest to write about China is former Reserve Bank of India, Governor Rajan. He writes about the downsides of China's crackdown on its risky big businesses. Now, Rajan writes that for 15 years, China has actually sought to rebalance growth away from exports and landed investment, fixed investment, and move towards domestic consumption. For Chinese domestic consumption to increase, wages have to rise and income from invested savings must grow. So China has to depart from the growth model so far, which relies on repressing, keeping wages low and returns to savers low, so that cost of capital remains low for entrepreneurs. Rajan says China has to move towards higher skill industries that pay workers more. And for that, China needs sophisticated financial sector markets to let companies raise money from the market at good rates and also generate reasonable returns from savers so that they don't have to only depend on the property sector. Rajan says the new cry of housing is for living and not for speculation is a good one coming from China. But then millions of Chinese, as Mr. Li just told us, have put their savings in half-finished houses. This is because of China having previously emphasized fixed asset investment. Now China has to deal with the overhang of unserviceable debt. Chinese authorities typically forcibly make investors bear losses and allocate them as they think appropriate. Government steps in if there is a generalized loss of confidence. So Evergrande will be watched for exactly this, how domestic investors are weaned away from housing and how foreign investors are treated. But Rajan's paper is actually not on housing so much. It is basically on the impact of the crackdown on big business and the ultra-rich that we have seen, you know, on Alipay, Tencent, etc. He says the risk is it will discourage the rich from trying to create value. You know, when bureaucrats say video games and private tuitions are dispensable, but chip manufacturing is important, you know, private entrepreneurs will not be able to innovate. The private sector will not take the risks which created the Tencents, which created the TikToks in the first place. Also, if the rich are scared from investing, China will not be able to shift to high-skilled, high-value production, which is what it needs. Government is also against cross-border data flows and foreign influence, including foreign listings. Now, this will make it difficult for the Tencents and the Alibabas to access international markets because those investors will be afraid their data is in China. So China is risking a slowdown. It can scare domestic savers, it can scare domestic entrepreneurs, and it can scare foreign investors. We will have to see how they handle it, is Rajan's conclusion. With that, we wrap up on Bazaar and Chartbusters up next.
DP World.